All right, folks, welcome to a market recap. Today, I was looking for a long, and the market is pumping viciously here, but I didn't have a setup during that time I was trading, so I did me trading for the day, and I just closed the charts. And today, we were looking for longs, obviously, as well as I said in the morning. So as I said already, you know what I'm saying. So now go to high time frame. Let's get straight into the point. The higher time frame bias was overall bearish to weekly. We had a weekly ERL to this IRL, this weekly order block, as well as we had a weekly CR to the downside. But on a daily, the short-term journal liquidity was bullish because the short-term journal liquidity paves the way to the long-term journal liquidity. Even if we're wrong in the long-term journal liquidity, if we correct it on short-term, it overall lead to the long-term because our setups happen a 5-minute, 15-minute, 1-minute time frame. There's no reason we should be caring about about the weekly. Only we care about the weekly for take profits and targets if the short term aligns with the long term. Otherwise, no. So on a daily time frame, a daily IRL, this ERL, a daily CRT to the upside. You see what over here. So CRT, we had a wick below equals higher prices, as well as we had a consolidation reversal. There's a low of the week, as well as we have a that's all we have in a higher time frame. Like I lie to you guys. Now go to the lower time frame to our market context and narrative for a bullish bias, which is delivering right now beautifully, but unfortunately no setups, so we couldn't execute. But on a 4-hour time frame, we had a daily range, super low, super high, stable low, stable high, premium discount. We're in discount. The daily range you want to buy up as well. We have a near continuation. If I'm bullish, I want the lunch to make the low of the day. The lunch did make the low of the day, and what else we had here? We had a 4 CRT, so 4 range. So we look to use a smaller range just to execute a bigger range, as well as we had a range here, right there. We had a bigger range, right? That was CRT, by the way. But that was CRT, by the way. So a range. There's we had SMT the range low, so now we go to range high, and that SMT I don't really believe it because the higher time frame. Since it's like the weekly, they have their own agendas. But I want to see. I want to see it go higher than eventually go down lower overall, but let's see if that will hold or not because GU pushed out the low and this one has SMT with it. Now going down to the lower time frame, even lower than this, that's all we have for market context narrative. Going to the futility time for the execution. At first, I did have a setup right on this, that 7 o'clock candle. I did have a setup. If you go to lower time frame, I did have a failed swing long, which failed, right? You can see it failed. Then we came back down, we failed. Why did the failed swing long fail? Because, as you guys know, OTE. And the market did not tap the 0.50% mark to 0.86% mark of the OTE. So I didn't execute a trade. That's why it's so important for OTE. Same thing happened Monday. The reason the Monday candle reversed after a floating 9RR was because of OTE. OTEs are very important in the market. You should always watch out for OTs because OTs are very important. You can see market did a deep retracement to the what? To the 0.79 mark, eventually reversed from here, right? That's why I'm saying that OT is very important. The market should always look out for OT because OT will give you that deep retracement, which if you're a trader, you want to buy deep retracement, sell deep retracement. You want to sell low, buy high, right? You want to, no. You want to buy low, sell high. You don't want to sell low, buy high. Okay, so yeah. Eventually, what else are we looking for? Since we were waiting for this, retracement to the 0.50% mark, eventually he pushed it out at the right time between 6 a.m. to 10:30 a.m. He pushed it right before 10:30 a.m. Eventually, he tapped the 0.50% mark. I was looking for a setup here, but I never got the opportunity to long it up because market never gave me that setup I was looking for. And the reason we're looking for a 413 this time was simply because of the what was the reason? What was the reason I was looking for a 4 CRT? Because of the 4 CRT, because in this case, why did I diss the Allo CRT and primarily focus on a 4 CRT? Because of the OTE, because OTE is right down here and the CO4 is down here, and because of the higher time power. Now we purged the right time. The 10:30 a.m. candle purged it out. So right when 11 a.m. candle comes around and I have a setup before that, I do not take a trade. So now going down to the lower time frame, I was looking for SMT with the 10:30 to 10:45 candle. We did have SMT with the GU and DXY, but it failed, so market over here, we did have SMT with GU and DXY. I was like, okay, I could potentially long it up, but I need to see some sort of confirmation here. And the confirmation I was looking for is consolidation, right? For the consolidation, I at least need 4 consecutive candles to consecutive, I need like at least like 1, 2, 3, 4 or more candles to consolidate. Because as you guys know, when the market expands and it consolidates, a consolidation births a expansion births a consolidation, right? So after the market expands, you will, what would you do? You will consolidate. After market consolidates, what do we do? Expand, right? Trend range. That's what I'm trying to look for by the 1 minute time frame for the execution. So we're looking for, a some sort of a range like this, which, but one day, well, isn't this a range already? No, because this is the candle that has SMT. So I'm looking for ranges around here, which I didn't get. But we did have the first step, which was a aggressive push to our key level, which was the SMT, to our point of interest. Eventually, the second step wasn't there because the SMT wasn't there. I was like, okay, there's no SMT here. The SMT got suspected. Second is that there was no consolidation. As you guys know, the only time we enter consolidations is through the only time we enter failure swings, if I say so myself, the only time we enter failure swings is due to because of the, what is it called? SMT, right? It was kind of hard for me to get that word out. So the only time we're looking to enter a failure swing is through SMT, and the SMT got suspected, so there's no longer SMT. They call it repairs. I was like, okay, I'm done for the day. Market's not gonna give me a setup because 11 a.m. is gonna come around, and I need this 10:45 a.m. candle to end. Right when 10:45 candle ends, it's gonna be 11 a.m. candle, and eventually I can't trade past 11 a.m. Right when it's 11 a.m. and I don't have a setup, I don't trade. And you can see market overall went back down. If you were to long this up, you would get stopped out. But what were we looking for the execution? I will give you an example to what we're looking for. Right, we want something like this. If we go to yesterday trade, which would have been a beautiful example. We want something like this, right? So we have SMT with this candle. We have SMT right over here. And for the SMT, we're looking there to be SMT, and we're looking for a expansion to our key level. Let's get this big bearish candle was expansion to our key level, to our point of interest, which the step 1 is there. Step 2 was we need a consolidation of at least 4 candles. Candle number 1, number 2, number 3, number 4. Right, it was way more than enough. Eventually, step number 4 is we need aggressiveness away from our key level, away from our point of interest, which this right over here, aggressively away from our point of interest, which is beautiful. And as you guys know, market goes from trend, range, trend, eventually range, and eventually trend again, right? Trend, range, trend, range, trend. That's all that happens. So a trend births a consolidation. A consolidation births a expansion to occur. So we're looking for at least 4 candles. But why 4 candles? Because they are in the medium term of consolidation, which is good amount of consolidation candles. And that's how many candles we're looking for consolidation of candles, as well as Y4 and not 3 and not 2, because 3, 2 is such a low, they're not that much of a range in candles, right? They're not really defined as a range. If 4 and above are defined as a range, as well as what's the next reason is that the more the candles that range, the better, right? So if I have a bigger range here, if market constantly ranges here, that's way better, because range, trend, the more that the market consolidates, the better, because it accumulates more, right? So are we looking for that to happen? Looking for enough consolidation. Eventually, after the scanner closed, we're looking for a rejection block entry, which is a total soup, and we're looking for a total soup entry, right? So we're looking to buy the people's stop losses. We look to sell people's stop losses, right? So the stop losses are right on this low. Believe it or not, there is, right? So since these are too close, we're looking to just right when it taps it, long it up for however many RR. This was a 5 RR trade, right? Spot one new whoa, Rosetta stop loss. Don't worry, we're gonna increase our stop loss by a lot of ticks. So since with that much low a stop loss, we're gonna increase it to like at least 2 pip stop loss here, just enough to cover the spread. Actually, 2 pip stop loss is a little how would I say it? It's a little too tight because the spread is 1.8 pips. Oh my goodness. So looking for that 2.5 pip stop loss, and we're targeting a 5 OR right over here, and eventually we're chilling after the 5 OR. So we want to trade like this. So you can see the difference between that and this. This one, no SMT. That one had a SMT. This one, no consolidation. After expansion, this one expanded and consolidated. This one expanded, but then it consolidated, and he broke the SMT. As you guys know, why do we look for SMTs? Why do we not just look for a soup and log it up? Why do we look for a SMT to be there, right? I don't care if my pair is the one to have the I don't care if my pair is the one to have the effect, which is, my pair doesn't push it out. I don't care about that. As long as there's an SMT with one of the quality pair, that's all I care about. Because what does SMT tell you? That this place is potentially gonna hold, right? When it holds, that means the market makers are in control. That means the market doesn't want to go any lower. The market maker doesn't want to sell any lower or go any higher. He wants to go eventually wants to reverse. That gives us enough signal to be like, okay, this low is kind of protected, so we're good, right? In this case, you can see the next step is that on this one we did have expansion, but there was no consolidation, and the S&T got broken, and then everything must align here, right? That's the only way we entered fairly swings, and this one is going for 5 OR. Beautiful trade, right? Let the others, you guys know, whenever in the right side of the market, you must let your trade breathe, right? Give it more pips. That's the mistake I made. I would have such a tight stop loss, and I'll get stopped out by a tick. Not a tick. I'll get stopped loss when the market goes back down or up because of the spread, right? Those right there are awful. Made me lose a lot of money, which nobody wants to lose that amount of money, right? And you can see all of this did reverse, but this is a model by itself. This model is considered to be you get in before they do, and you get out when they get in, right? So the majorities are getting it from this breakup blocks, this order blocks, this Ferrari is coming out here in a higher time frame. There are majorities are getting from there. But I guess you're gonna get out when the majorities get in. Why? It's a model by itself. It's a bread and butter model, as well as it's a secure, right? So because when the big people get in, when the majority get in, the market likes to fuck up with the majority, right? So even if the move is wrong, you would make profit. So you get out before they get in, right? You get out when they get in or before they get in, right? So before the majority gets into market, when the majority gets in the market will fuck their position up, right? By stopping them out, like what happened to us, right? On Wednesday, but a lessonable day. Today, no trades here, but we always have SMT, and this is a market recap. The lesson of today is, there's no lesson here, but it's to be very smart on trading, right? You want to be not forcing trades. You must always have SMT with one of the quality pairs. I don't care if my pair pushes that out or not, but there must be SMT. Because why? And one other thing is, somebody DM me like, bro, why do you trade total soups, right? Resistance blocks are formed total soup because if you go back to just bodies, this is just total soups here, right? Total soups everywhere here, right? The bodies are just total soups, right? Simple as that, right over here. Total soup, right? Total soup, long it up, right over here again. Total soups here. What's the next example I'll give you guys? Right, total soup again. Boom, bodies, right? The bodies, believe it or not, most of the people, they use bodies a lot. So bodies here, there's a lot of resting liquidity here, right? Over here, there's a lot of resting liquidity. This is an intermediate term low. There's a lot of resting liquidities around here. Why? Because a lot of people use bodies instead of wicks. They don't believe the wicks, they believe the bodies more. But as you guys know, us, we believed in the wicks and the bodies. We use both as an advantage, as what separates us from the majority. So, as you guys know, why do I use a resistance block and a total soup entry? The total soup being the failure swing, because failure swing, is a total soup because one pair takes out the takes out the liquidity while the other one doesn't, making it a total soup. And resistance blocks, people have their stop losses on the body, making it a total soup again. And the highest probably of a total soup is on resistance blocks when they're confirmed by order blocks, and other one is affiliate swings. They are one of the highest probability, setups, because every total soup is accompanied by SMTs, right? Every failure swing is accompanied by total soup and SMT. They're the same thing. SMT is just a total soup, but one pair takes it out, the other pair doesn't. So every total soup is accompanied by a SMT, making it a total soup as well as a failure swing. Failure swing is the same thing as total soup, right? One pair takes it out, while the other doesn't, right? Simple as that. So why do I do that? Right, I haven't answered the main question. One guy asked me that, why do I trade total soup? It's because of the emotion. My stop loss is probably wondering, well, why do you want to have a side stop loss, right? Don't you want to trade to breathe? I am letting it breathe. I'm increasing my stop loss by a whole pip. Not ticks, but pips, right? And what's the whole reason? Is that if I'm wrong, I get stopped out quick. If I'm right, market profits me, right? Because believe it or not, if you're in a losing trade here, right? If I long it up over here, and if I'm in a losing trade, my stop loss is there, right? If the market goes down and my stop loss is wide and the market has constantly red on my screen, that gives me much more emotion, because what the market tends to do is, if your stop loss is wide, right? If you have a really wide stop loss and you're overall going to lose, let's say you can lose in a trade, and the market slowly goes down to your stop loss, that right there is gonna gain you so much emotion. But when you get stopped out, let's just say get stopped out quick. Because when I lost this trade right over here, I didn't even feel emotion because I got stopped out so quick, which is a good thing, right? Because your mind doesn't react too quick. You first need to see it enough in order for it to get emotional, right? You need to think about it enough to get emotional. When you fucking losing position, you look at the chart and you're losing your position, you can't think about it, you're gonna get emotional. But if you're in a trade, you instantly get stopped out. You're less to be emotional because your mind doesn't have enough time to react to it, to be emotional about it, right? And as you guys know, I'm not even emotional at all, but I want to have a technical edge over the market, which that is a way. A total soup is a way to have that edge, because if a total soup, if you're wrong, you're getting stopped out quick. If you're right, you're making money, right? Because when the market is in green, you won't feel that emotion. But if you're gonna go on a red and the market takes a long time to go hit a stop loss, that emotion roller coaster is not that good, right? So you wanna, if you're gonna lose, how ICT said this, ICT said this a long time ago. If you wanna lose, if you're in a losing position, you want the market to stop you out quick, so your mind doesn't have enough time to give you emotion, right? To give you a emotional response where you don't get emotional, right? But if you have a losing position and have a wide stop loss, market can stop you out, and that shit right there, that's a roller coaster of emotions. But if you're in a winning position, that trade emotion is easy to conquer because you're winning, right? Who doesn't want to win, right? So simple as that. And that's the whole reason why I'm doing total soup, is because of that. If I'm wrong, I get stopped out quick. If I'm right, I make money, right? Because some of my trades last, if I one of my losing position lasted for a whole day, and I eventually lost. And that shit, the emotional roller coaster on that was painful, right? Although I didn't really feel that emotions, right? But we want to avoid emotions, right? We want to avoid unnecessary emotions. I don't want to feel emotional for no fucking reason, right? Although today we were right. We were right every single day. I was right on Monday, right? Monday I was bullish, I was right. Tuesday I was bearish, I was fucking right again. Wednesday I was bullish, I was right again. Right? Overall it did go down, but we had a position to go to the upside, so overall I was right. Thursday today, we're right again. Right? It's not about being right is easy. All you gotta say, yeah, I'm bullish. And if the market goes up, you're right. But can you capitalize on it, right? Which to capitalize, you need to have rules, you need to have all this, trading guideline rules for execution rules, right? This this specific thing must be there, that specific thing must be there, right? Etc., in order for you to execute, because for all you need is one trade or two trades or three trades, 4 trades a month is enough. If you have compound interest, if you know how to use that in a good way, because your profits will naturally compound, you will overall be rich in the next 2 to 3 years, easily. Rich What I mean by rich is not fucking $1 million. $1 million where I live is average, right? I made that goal, right? I mean, like as a middle class, I made that goal. I mean, So rich is 10 million above, but see you guys later. Enough ranting, but that's a quick little lesson. And I'll see you guys later. Peace out. I love you guys. Peace.